大家好，昨天资深经济专家罗伯茨为我们分析了联储降息25个基本点的实际意义，对经济会产生哪些推动作用。今天呢，由资深的财富管理基金专家莱瑞亚为我们分析，从市场的角度认为这25个基本点的降息到底具有什么样的实际意义。
The fact that they're doing a 0.25% means that they think that the economy is somewhat stable. They are trying to control inflation. Inflation has been upticking. Unemployment has been on the move upwards. So there is two of the biggest factors of the Fed's job is to help rein in those things. So anyway, with these moves to the upside, the market, it is in line with what the market was expecting. And so that makes the market very happy. Markets love certainty. I think they did the right thing. I don't think he's late. Versus what the administration was saying, oh, we should have done it sooner, Powell's too late. No, he's been on the money. He's been right more than wrong when it comes to the job he's been doing, whether it be moving the rates up, moving the rates down. The simple fact is that the economy, albeit less, is still growing. So you have to temper people's expectations. The last thing we want to get into is an environment of stagflation, where you have stagnant wages, high unemployment, inflation out of control. Now, I have to give a warning. Inflation is going to continue to go up. Hence, that's why these cuts are absolutely necessary. We've talked about 3 before the end of the year. That means the 1 now, 1 in October, and 1 in December. They've talked about another rate cut beginning the year. So these are preemptive steps. These are logical steps, non-emotional, taking the numbers into consideration, and it could be a boon for the United States economy at the right time. The only wrench that I would think at this particular point is, what if the tariffs affect things more, whether it be to the upside or downside? Is the Fed going to have to pivot? I believe that this is the right move for right now. I'm sure that if and when the time comes, they will absolutely adjust their course. Unemployment has been inching up bit by bit over the last year and a half. It's not that it hasn't. It's just, it was more, in the past, it was more controlled. We're not seeing the same thing now. It is still somewhat muted, but we are not seeing the same thing that we saw last year. So year over year, we are starting to see that crawl up beginning, hence the rate cuts. That's one big thing, but it is not the only factor. Let's look at the housing right now. Anytime the Fed does a rate cut, the housing market or the mortgage rates tend to go down, but not in tandem with the rate cuts. All right. We're already seeing, we were at 6, I want to say 6, 7, almost 7%, before this was even announced. And then all of a sudden the mortgage rates started going down. So that's going to spur home buying, because a lot of people have been on the sidelines and waiting to buy a house. And this is going to spur some buying, which in turn could spur a growth area in the builders and other areas related. So that's one part. Same thing if you wanted to purchase a car at this particular point. You're purchasing, all of a sudden the rates are coming down. Let's just say they were 8%, for argument's sake, and all of a sudden that new rate is 7.5%. The decision could be accelerated before, to purchase that car before the end of the year or you wait a couple of more rate cuts to do it. But some people can't wait. Some people need the items now. Getting back to the market loves certainty. The rate cuts are a catalyst to bring the markets up. We're still going to see a traditional pullback at this time of year. Now, I've seen pullbacks for the last 30 years occurring during this period of time, whether it be September, October, to late October, because mutual fund companies, hedge funds, and other concerns, people are doing tax loss at this particular time, right? So that in itself spurs a lot of selling off and people taking profits. So the rate cuts are going to preempt that a bit, and we could see I still see a pullback end of this month in October, but I still see after that period of time unprecedented opportunity for people who are willing to get in, who are willing to strategize how to get in, what sector to go in, i.e. technology. And I would also look at infrastructure now, because as I mentioned before, home building starts buying, we're going to see that across the board where the expenses are a little bit less, but once again, keep in mind, tariffs might throw a wrench into that.